If you're looking for somewhere to put your savings, if you're looking for the highest interest rates available out there for your cash, then you have come to the right place. This is my April 2021 update of the best savings accounts here in the UK. I do this every single month, both on my YouTube channel, Andy Clever Cash, and regular updates over on the Be Clever with Your Cash blog. But if you want to make sure you get any future updates, make sure you hit that subscribe button, that notification bell as well, not just on savings accounts, but credit cards, current accounts, and all the other videos that I produce week after week. So in this video, what I will do in a moment, I will take you through the highest paying accounts. If you're going to put your money somewhere, either new money that you haven't put in savings before or moving other savings pots across, I'll tell you the ones paying the highest rates of interest. But as ever, before we get into that, I'll give you a little bit of update, a little bit of savings news, what's happened since the last update. Now, you wouldn't be surprised to learn that there have been more cuts. Yes, again, rates have dropped since my last video. They're not happening as fast as we saw before. It could be previously every day a rate cut would happen and things would just go da-da-da. Now we've just sort of seen maybe one significant drop on easy access accounts and also a series of cuts on regular savers. Let's do that easy access one first of all. You might have remembered I mentioned before last month that Marcus was back. This has been a very popular easy access account because it always has been essentially market leading, offering one of the highest rates for an easy access account. And I'm sure you know this, but easy access account basically means you can put in and take out your money whenever you want it. Obviously, you can get higher rates when you fix, or you can get higher rates when there are restrictions sometimes, such as how much money you can earn interest on. So they're over there, but generally for larger sums of cash and you don't want to lock it away or have those restrictions, easy access was great. Now, Marcus came back and offered 0.5%, which wasn't amazing, but it was better than everywhere else. They dropped it down not that long after, bringing it back to 0.4%. And obviously, a lot of the other places followed suit as well. So 0.4% is the best you can get in an easy access account right now. The best. Most of them will be paying a lot less. Now, what's also interesting to note is that inflation, the most recent inflation figure that was released, this is the February 2021 figure, but it was just released a couple of weeks ago at the end of March, is 0.4%. So at the moment, if you have money in that market leading easy access account, you are beating inflation this month. For all we know, inflation will increase, go up, or it could go down. It's been obviously an unusual period for everything, yeah, but obviously inflation has been sort of up and down, hasn't gone beyond 1% since last summer, so it's still relatively low, but month to month it's hard to say whether the interest you're going to get on your account is going to beat inflation. But if you can, you want to try and do this as much as you possibly can, because if your savings are earning less than inflation, then you are losing money in real terms. Your spending power is reduced because inflation is the measure of how much things that you spend your money on are increasing. So if things are getting more expensive by 0.4%, but your savings are earning 0.2%, well, you are losing out in that difference. Okay, so that's important to know. Something else that happened though, almost a few days later, I imagine it's a direct response to Marcus cutting its rate. I think the marketing team at Chip, the savings app, thought, right, there's going to be people here with money who are going to think fed up of that, they're going to move their cash. Maybe we can get some of them in their Chip Plus One savings account. Now, I've mentioned this before. I'm going to mention it again later on, but I will do a whole video going into detail on this very soon, because so much has changed in that just in the sort of 4 or 5 months since the account launched. So I want to go into that in more detail. I've got a whole article which I will link to in the notes below that you can read before I do that video update. But anyway, they said that they were going to offer their 1.25% interest. Normally, it goes on to savings of up to 5k. Now they're going to double it. They have doubled it. So you can get 1.25% on up to £10,000. So that changes things as well. That is, so now suddenly makes it a lot more attractive if you've got a lot of money. So that's the other thing that's happened in terms of sort of big rate cut and then a kind of competitor coming in and trying to grab some of that business. Again, more details on all those in a bit. The other big cuts that have come along have been with regular savers. Now, I mentioned a few months ago now, I think it was, that First Direct and HSBC, which have historically been amongst the best regular savers out there in terms of offering the highest rates of interest, they cut theirs from, I think it was 2.75% down to 1%. So quite a big drop down on those regular savers. Now, that was it. That happened. All was fine. Suddenly, a lot of the other banks have done the same. I will go through those in a moment when we go through the different accounts. But essentially, you are now looking at 1%, maybe a touch above 1% as the highest rate you're going to get on a regular saver. And you might be thinking, well, is that worth it anymore? It's hard to say, really. You are at least locking in a rate on most of them. Some of them are variable, but most of them you're locking in on a rate at 1% for the next 12 months, which is better than you're going to get probably in most other places. And again, locking it in just in case things drop even further, and they could do. We just don't know right now what will happen and when things might change. So if they will go down even further, at least you're getting some money at 1% every single month. And if inflation does start to encroach could reach higher up to 1%, then at least it's sort of protecting itself a little bit. I would say they're still worth it though, even though the rate isn't great, because what I love about regular savers, apart from the interest rate is higher than most other places, what I love about them is that they encourage you to save every single month. That savings habit, which is sometimes so difficult to get into. If you have a regular saver set up, and I've got a whole video explaining how they work if you're a bit unsure of these, because they are different to normal savings accounts in how the interest is calculated, how it's added onto the money you put in. If you're putting money aside, let's say it's £200 every single month, you get paid, standing order moves it straight out of your current account into your regular saver every single month. £200 a month, £2,400 saved over the year, plus that little bit of interest on top. They're really, really good ways to help you boost up that money you have set aside. So still a fan of regular savers. It's just sad news that so many of them have dropped. So that's the savings news. I'm sure other things will happen and I'll update them in the video next month. But let's talk about the best accounts right now, the highest paying accounts. Now, keeping with regular savers, still the highest paying account out there is the Natwest digital saver. This is a monthly saver, pays 3.04%. You can only put 50 quid away every single month, and you only get interest on savings up to £1,000, and you have to have a Natwest current account with them, or it's exactly the same account but for RBS. And you can have, I'm pretty sure you can have both of those as well. So you could put potentially 50 quid in one, 50 quid in the other. Now, I wouldn't open up a current account just to get this, but if you have got a Natwest or RBS account or both, well worth making sure you are getting 50 quid, putting that into those regular savers every single month. Suddenly now we have a huge drop down. The Club Lloyd saver, that's one of the ones that has dropped, was 1.5%, now down to 1%, which is a real shame. That is offering, I say, 1% if you have a Club Lloyd's account. We still have those, what have we got here? HSBC, First Direct, Nationwide, and TSB. You have to be a customer with those banks, but again, they all have regular savers offering 1%. Halifax, as I mentioned before, you don't have to have an account with a bank to get their regular saver, 0.75%. Now, most of those are fixed, other than the Nationwide one, which is variable. The other variable regular saver, which you might want to check out, so variable obviously means the rate can drop. Coventry Bill and Society, 1.05%. That one has generally been one of the best regular savers outside that leading bunch for quite a long while now, but as the other rates drop, it drops its rate as well. So if we see any more cuts, I imagine that one will fall down a little bit as well. Beyond that, as ever, same as last time, the best high interest current accounts are the Virgin Money M Plus account, paying 2.02% on the first £1,000 that you have saved in that account. Later this month, it's Connected Savings account, Easy Access account, which you may well have if you've opened that account already and took advantage of the switching promotion. That's going to drop from 0.5% to 0.35%. Although in the scheme of things, that's not too much difference to the best 0.4% you can get in other places, but not a great account in terms of the rest of your money. Now, you probably can do better elsewhere. Nationwide Flex Direct still offers 2% fixed for a year on the first £1,500 you have saved in there. But as I've mentioned a few times before, because that account, the promotions that you get with it, you only get for 12 months for the first year. For the first time you have this account, you might want to hold off and wait until things hopefully recover and maybe a better promotion comes along, because it's not really worth a huge amount of cash really in that first year. Is it 2% of £1,500? It's 30 quid. Yeah, maybe it's better to wait until that offer is nearer 100, 150 quid. It may never happen, but potentially that's something to think about. Next up, we've got an app savings account, and this is the chip account that I mentioned before. As I said, I'm not going to go into a huge amount of detail now. Already touched on some of the changes at the top, and I will do a whole video update on what's going on. But this is an account where you can get 1.25% on your savings of up to £10,000. The important things to know here, first of all, are If you want to save more than £2,000 in that account and earn interest on it, then you need to opt in for the Chip AI version. And this comes with a £1.50 fee every 28 days, which eats into the interest, obviously. In fact, if you have anything between 2 and roughly 3.5 grand saved in there, that interest earn will be completely wiped out. In fact, you might actually cost you money to have those savings in there because of that fee. Only starts to kind of build up and get better for you the more money you have. And if you have £10,000 saved in a Chip Plus One account linked to Chip AI, it works out actually the real account, the real interest of 1.06%. Still a lot better than you're going to get anywhere else. But I want to do a whole new updated video on that because there's a lot more to know about. Incidentally, I've also heard that there's going to be a new incentive bonus coming along with that. So not only if you sign up as a new customer where you get an interest rate, you might also get a little bit of a cash perk as well. Small amount of money, but well worth hanging around and waiting for that one. So again, more information on that as soon as I have it. Now, the other easy access accounts, as we mentioned, aren't fantastic. Marcus is probably still the best one at 0.4%. There are a few others out there, but they're all much of muchness. You can also get 0.4% in a cash ISA with Charter Savings. So if you do want an ISA, you need an ISA for whatever reason, then 0.4% is the best you are going to get. But most people, they don't need to worry about that. There is a notice account paying 0.6%. This is via Moneybox, which is an app. You can put in as little as £1 into there, and obviously you want to put more than that if you want to use it. 95-day notice to get your money out of that. It is a variable rate account, so it could drop down at some point, but you've got notice for that to happen, and you can take your money out without penalty if it does drop down. In terms of fixes, obviously generally if you fix an account, you're going to get a higher rate of money, and it is locked in for a longer amount of time. The best ones, again, not fantastic, no real change since last month. 0.65% is your best bet. Now this is with a bank called Ahli, AHLI United Bank. Minimum deposit of £1,000. You get 0.65%. You have to go via the savings marketplace Raisin to get this. If you're paying at least 5 grand, then you might be able to get a £5 bonus on top of that. Zopa also has a 1-year fix at 0.58%. There's been a change in the best children's savings accounts as well. Although the Halifax Kids Monthly Saver is still offering 3.5%, the HSBC My Savings account still pays 2.5% on up to £3,000 saved. Again, a whole video on the best kids savings accounts, so do check that one out. However, the junior ISA from Coventry Building Society has dropped from 2.9% to 2.25%. So quite a big drop there in the interest rate that you get on that junior ISA. But unfortunately, in terms of ones that we can all get hold of if we are a parent or a grandparent, that's still the best bet. A couple of building societies will let you, if you live locally, maybe get a slightly better rate. A couple more things to talk about. Premium bonds. Now, I've done a whole video which you might want to check out on those, how they work, how they compare to other savings accounts. They are pretty strong now if you've got a lot of money, more than sort of 4 or 5 grand, and you're likely to, with an average rate of luck, get similar returns as you would get if you had that in that 0.4% leading easy access account. So there's no guarantee that you'll get anything, but you might do. So as I shared in my video, my first month of having some money in premium bonds, £10,000 in premium bonds, I won nothing. The second draw happened just at the start of April, so just a few days ago now. And this time I won 25 quid. So I have now started to win. Hopefully over the year, I'll get more of these smaller prizes. And so with the average rate of luck, I should be getting a rate which is better than I'd have if that 10K was sitting in one of the other accounts. Chip Plus One, increasing that limit to 10K does kind of make that a harder choice between the two. But I am going to do an update on the Chip Plus One with a bit more detailed comparison for you. And finally, the last one to talk about are ethical savings accounts. If you want to make sure that your money that you have is being used for good rather than for bad, then you probably want to avoid a lot of the big banks out there because they are going to be investing your cash in things that you possibly don't agree in. So where do you put your money elsewhere? You might be compromising, get a slightly lower rate for this. Now, most building societies, if they have a decent rate, they're worth considering because most of the money they lend out is for people to have a mortgage and to buy a house. So they're not going to be investing in those other areas. So building society is generally quite good. Nationwide, mentioned a couple of times today, is well worth considering in that case. There are Sharia compliant bank accounts and savings accounts as well. One of the best ones out there maybe in terms of the rate is Al Rayyan. That's 1 year fixed 0.55%, minimum deposit of 5 grand. Again, locking your money away. You get an expected return with this rather than interest, but that's just a kind of a terminology. Essentially, you're going to get the same kind of money back on your savings that you put in there. Slightly different there in how these ones work. They adhere to the laws of Islam, so they won't be invested in alcohol or tobacco or gambling or things like that. And finally, another one to tell you about is the Ecology Building Society. This is probably sort of a very pro-ethical spending, ethical investments, and the money you put into there, as the name suggests, Ecology Building Society will go towards some more proactive funding measures. They have a regular saver that pays 0.8%. It is a variable rate, so it could drop down, but 0.8% is not that much further down than the 1% you might get with the other regular savers. And you do that knowing that hopefully your money is going towards something good. That is it for this update. Obviously, loads of information. As ever, you want to check out my blog post where I update these accounts, a bit more information, the link through to those accounts, any changes that happen between this and the next video. Do head over and read that. I will link to it in the notes below, and you can click on it up here as well. And don't forget, please do hit that like button. Leave me a comment below. Any questions you've got about savings, maybe I can address them in a future video. My name's Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.